afternoon. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. These are the top headlines that we're tracking at this hour. Another day and another record high for the Nifty. The index head towards the 10,900 mark, held by banking stocks. Broader markets failed to keep up the pace. Nifty Bank Index rises the most in nearly 3 months after reports suggest that the government is considering allowing 100% foreign investment in private banks. Ultratech Cement meets street estimates in its December quarter earnings. The counter, however, slips further from the day's low. And Yes Bank and Bharti Airtel are the other two Nifty companies slated to report their earnings today.
And we'll certainly hear from Yes Bank in any moments from now on Countdown. I'm sure the press conference is lined up for 3 if I'm not wrong. So do wait and watch for that. What is the index doing? Well, off the highs of the day, but still about 0.75% in the, or 0.75% in the green. So not bad going really for the index. It's actually the Nifty Bank, which is the main reason why we're doing what we are doing. Exceptional show by the Nifty Bank. But must say, the broader market breadth, not as impressive. So Nifty Bank holding on fine. But if you look at the mid caps and the small caps and the advanced decline ratio, you will see what I'm talking about. We are off the highs of the day and off the day's highs of the day quite considerably for the mid cap and the small cap end of the market. Look at that, about 1% apiece, and the market breadth will come up on your screen. At some point of time, the crisscross happened, and then the gap has only widened. In fact, the number of the advanced decline ratio is similar, is a mirror image of what it was at the start of the trading day today. However, the heat map will show you that the quantum of green still decent in favor of the banking names and the heavyweights holding the index higher. So forget Indiabulls and UPL, but it's HDFC Bank which is now at the highest point of the day, ITC which is up 3%, HDFC about 2.5%, ICICI Bank higher in trade, and L&T. So 4 or 5 large heavyweight stocks which are helping the index stay afloat, and the contributors list would have shown you, because otherwise you see a heat map like this, you would believe that the Nifty is in the red, but the contribution list shows you the kind of numbers that are put in by the HDFC twins and ITC, negating almost all of the red that is coming in by a clutch of other names. But the broader markets, Pradeep, you have to say, have not had a pleasant day today.
Definitely, but we'll look at the good news first and let's see which are the gainers, and there are many actually. So Excel Crop Care is a key gainer in today's trade. You also have hotel stocks once again rising, but the focus is not on EIH and EIH group of hotels. This time you have Taj GVK and Royal Orchid doing well instead, and then Mindtree post that double upgrade. We were expecting some fireworks, and stock has not disappointed, up 9% for a stock like Mindtree is really an excellent show, so to say. Gulf Oil Lubricant would figure among a few gainers, and then Sanghi Industries, we have seen a decent run up in cement stocks, and this is the next one coming in. Those who are not doing so well, as Neeraj had also mentioned, there are more losers than gainers right now. Adani Power disappointed in terms of numbers. Markets got more time to react today, and the stock is down now 8.5 to 9%. You also have some correction coming into Indorama Synthetics, but media is a space that has been doing quite well over last few sessions, and you have stocks like Shemaru, TV Today that were kind of leading the charge, and these actually figure among key losers, which shows some kind of nervousness or a profit booking, a trend of profit booking that is emerging. So most active stocks, most recent gainers are the first one to cool off, and that is what is really happening. Among some more high beta names, RCom also figures among key losers in today's trade, Navneet.
Well, Pradeep, some divergent moves seen for the broader markets and the benchmark indices, which are still holding about their gains, but sharper cuts have been seen today for the broader markets. Let's check the cues from the futures and options market then. The futures of both Nifty and Bank Nifty, last when I checked, were trading at a discount. We'll just let you know the current status, what it is, and the OI build-up. As you can see, the Nifty futures trading at a discount of almost 12 points, now build-up of 4%. The Bank Nifty futures traded at a discount of 45 points, so it tells you there could be a chance that the markets could be feeling a bit tired at these record high levels. But look at the OI build-up on Bank Nifty January futures. Once again, you don't see a number like this on daily basis. Open interest is almost up 25 to 26%. Remember, today is also the day when the weekly options contract, they expire for Bank Nifty. And if you look at the trends that we're getting from the options data, there's been a lot of call writing which has been seen for strikes like 26,800 26,800 and the 26,900. But on the put side, heavy writing has been seen for the 26,600 and the 26,650 strike. So that's telling you expiry could take place in that range of 26,650 to about 26,750. But let's see, the trends do change in the last 15 to 20 minutes of trade as well. And on the option side, in terms of Nifty, there has been heavy writing that one has been seeing on the put side for 10,700 and 800. But today is the day when actually the call writers are running for their cover. So the 10,700 call, as you can see, has shed almost 10 lakh shares so far in open interest. But the range remains the same, 10,500 on the downside to about 11,000 on the upside. That's where so far the maximum OI concentration is. Just two stocks I want to highlight. One of them Pradeep's already spoken about, and that's Mindtree. The count has reacted pretty positively post good set of numbers. It's trading around the fresh 52-week high levels, and we've seen good volumes on the cash side, so do watch out for the delivery data here. And if you look at the build-up on the futures side, definitely the OI build-up has been really high, so almost 50% higher for the January series, telling you the traders are taking bullish bets here. The other one is HDFC Bank, a counter which has almost 10% weightage on Nifty, so it's a very, very important counter, and we all know why the stock's been going up. In case if that news is confirmed, in case the government passes that proposal, which so far is not confirmed yet, that private banks, the FIs could hold around 100% stake, and that's the reason. And this is the darling of FIs. 74% limit has already been exhausted here, so 4% higher in terms of open interest addition. But the futures, Neeraj, are trading at a discount. I guess the Adani Port numbers are flashing there on the screen. The net profits have come in at 994 crores. Let's just pull up the stock and see how that's reacting. The consolidated revenues are there flashing on your screen, 2,688 crores. And the stock, I guess, is recovering post the numbers. Do you have more details there, Neeraj?
No, I mean, the basic numbers on your screen, the profit numbers compared to the Bloomberg estimates, slightly better than estimates, and which is why maybe, just maybe, pull back. But you would have to say that 996 crores versus estimates of 946 would place these numbers just marginally above estimates, at least on the top line, at least on the bottom line front. Waiting for the revenue numbers to come out on the screen.
I think the revenue too is above the Bloomberg estimate. 2689 crore is what it's come, and the Bloomberg estimate was about 2521 crore.
Okay, so that's marginally higher, but the bottom line numbers fairly impressive, but it's a stock that's hardly moving. Anyways, we'll wait for more details. Maybe again our analyst at some point of time to come in and talk about these numbers as well. But certainly seems to be a case. Ultratech was a mixed bag. Adani Port and SEZ, from the looks of it, seems to be a number which is marginally above estimates. We haven't had too many bad numbers. Let's talk about that with Sunil Subramaniam. He's Chief Executive Officer at Sundaram Mutual Fund, joins us right now on the show. Good having you, Mr. Subramaniam. Thanks so much for joining in. If the markets were looking for one key support coming in, and that was from the results, certainly the start of the result season hasn't disappointed.
Yeah, but I think if you look at the support, really speaking, is for next year. I don't think for this quarter, right, if you look at most of the earnings forecasts, what the market is discounting, is the next FI.
Sure.
This FI, I think you still have the GST impact and all of that not yet fully. So I don't think there's too much of emphasis on this quarter's numbers. On the contrary, the results season would turn the focus on the guidance. So what I would say is that yes, the results season is important, but not these disclosed numbers, but what is the guidance looking for next year. So I think this year is pretty much a done deal. So we're in the fag end of the year.
So what have you made of whatever commentary you would have heard till now? There is HUL which came out, the tech, two or three tech companies that have come out with the numbers.
We are by and large reasonably happy with what the outlook is looking. Tech is looking good because I think world growth is coming back, and that's reflecting some of the big orders you would have read about companies bagging. And on the HUL and similar consumption numbers also, the top line numbers are looking decent. So we are, in that sense, not too disappointed with what so far the revelations are.
Okay, so that's the call coming in here. If you look at the kind of heightened volatility in run-up to budget, you know, everybody is kind of trying to preempt what could happen and where should one really get in. But do you also think, you know, we have often seen that the enthusiasm kind of peaks, or the news flow kind of peaks around budget time, and therefore this may not be the best time to get into the market. How do you really plan your strategy? One
observation on the budget compared to previous UPA governments versus this government. We found that this government has tended to devalue the actual budget. And lots of announcements come in the run-up to the budget rather than at the budget. You study the last budget, study the year before. It's a particular way, and in fact, they create scares around the budget, and the budget turns out to be a relief of not implementing that negative which came up. So this government has a strategy of managing the budget, at least from the evidence so far. Not that I have any clue or any insider information on this, but I'm just seeing, and this time also you see lots of news flows come in the run-up to the budget. They keep up, and at the budget, you know, it's kind of, oh, ye hona tha, wo nahi hua, and then there's a relief. So I see the typical pattern playing out, and that's why this heightened volatility, these kind of a news flow announcement are all part of the, how would I call it, PR management or on the budget exercise of the government?
Sorry, anyways, please go
So
ahead.
what do you really expect from budget?
So from the budget, I think too clear. I think they will announce a huge national employment policy which will lay out the roadmap for employment generation coming through. One. Two is we expect that a lot of the government's infrastructure spend is going to be diverted to rural, whereas not only rural job creation, but in terms of taking care of the, the vote bank, so to speak. So the third aspect of it, I expect them to really announce some things on the banking system in terms of what are they going to do on the NPA, future NPA management. So there are three areas that I think that they will touch upon. One would be the creation of a bad bank in terms of putting toxic assets into a separate vehicle. Second would be the directional path of the mergers of these banks, because capital infusion is not going to happen pre-merger. They want to give it to good banks, and so they want to make sure that the bad banks get absorbed within reasonably good banks and then do that. So that's some direction. And third direction would be on fresh lending. How do you make sure that all this capital infusion that they're going to do, which is going to create a lendability to the banks, doesn't go back down the NPA creation route. So I think that will give, especially for FIIs and all of them, a lot of clarity in terms of investment. So this FDI movement, so you would see private sector banks, easily that limit will get absorbed. But in public sector banks, they would still hesitate till their roadmap is made clear. And I think from a capital infusion perspective, this is an excellent decision in terms of if the roadmap is clear and you can get foreign capital into the public sector banks,
Sure.
there's nothing like it, because one, you have the fact that a bank can leverage capital to 8 to 10x. Second, the money multiplier effect on the economy when bank lending sets up. So banking, I think, should be a huge focus of the budget in terms of plans and directions forward. So I think that's rural development plus the employment generation. I think those will be more like a policy statement budget rather than real. And the good news, what I at least was happy, was the 50,000 to 20,000 move, which indicates that closer to the budget, the numbers are not looking as bad. The government is saying, okay, I can do with lesser borrowing.
Actually, I have a question on that, Mr. Subramaniam. But just before we do that, since Adani Port numbers are out, just want to revisit Somit, because I now have the consolidated margin number too, which is looking substantially better than the reported one and the expected one as well. And Somit is waiting by. Somit, what did you make of these numbers?
So the numbers are definitely good and ahead of the Bloomberg estimates. Now the revenue has come in at around 2,689 crore rupees and EBITDA number is at around 1,785, while the net profit has come in at around 994 crore rupees. Now this net profit number is 18% higher than the last year numbers, while the EBITDA number is 26% higher than the last year numbers. And these numbers are also ahead of the analyst estimates. Margins have come in at around 66.6%. Now this is because of the higher container volumes and cargo volumes that the company has seen in this quarter. The container volumes were up by around, as you can see here, the container volumes were up by around 29% compared to last year, and the coal volumes grew by around 13%, while the crude volumes were higher by 10%. So all in all, higher volumes have led to this outperformance in this quarter. Also, the cargo growth in Q3 was around 11% compared to the last quarter. Also, there has been some balance sheet improvement. If you can see in the Q-on-Q basis, the finance cost has come down, which shows that there could be some improvement in the balance sheet side and the debt must have come down. So this is a good number that has come in from Adani Ports in the third quarter.
Okay, no, forget Adani Power. Adani Power is down 8.5%, that's separate. But Somit, thanks so much for putting that into perspective. Adani Port is the one which I think stabilized after an initial blip, about 1.5% lower. So this is more a trading reaction as opposed to anything else. The numbers seem pretty much in line. If this is anything to go by, and forget the expectations, Mr. Subramaniam, or otherwise, just the fact that one of the largest private port players has reported a 21% jump in revenues. And while they have coal trading as a large portion of theirs, but what does this imply as to what some part of the economic activity would have been in Q3 if Adani Ports numbers are anything to go by?
I think this is reflecting the GST stocking, destocking thing flowing through. It's just a natural progression of what happened in the June quarter in terms of stocking prior to GST, and then the destocking, and then the fresh. So I think it's just that flow which is reflecting in the numbers in this quarter.
Okay, Arun Govil, I think I'm told the analyst is with us as well. So just get him for a quick, we'll just get the management of Ducon Infra in just moments from now, but taking a final thought from Mr. Subramaniam before we end this discussion.
Sure.
You were mentioning about the RBI borrowing limits being lowered, the 50,000 to 20,000.
Not RBI,
government bonds, yes.
Yeah.
Is this because, do we have a definite thought about whether this happened because there was lesser expectation or a lesser need felt, or whether there was lesser confidence about whether the high amount would be absorbed or not?
No, I think it's like this. You see, when the government announced a 50,000 crore, so which means what? The government has a clear expenditure plan, right? And a gap from revenue to expenditure is what they seek to fill by borrowing. The fact this came down, I would attribute it to the direct tax collections coming in ahead of the expectation. So when they're doing the math, they're seeing that this direct tax 18% rise. Then when they do a projected fiscal math for next year, if they take a 25% direct tax, it'll look like not unreasonable on the bag of 18. So this is all about math. The expenditure plan is very clear. I think by now the government should have that pretty clear with the Gujarat elections now having gone by and the next. So how they're going to finance it and does that projection seem reasonable or not is what the reactions will be from either FIIs or players. So I think what this indicates is that with the direct tax collection, next year's projection of slightly higher will not seem out of reason so that they can project a fiscal deficit within the FRBM outlook. So I think it's just the math playing out, which I think is that's what I said. It's good. It's about, to me, PR in terms of the budget is a PR exercise essentially, because most of the announcements take place before the budget and action takes place after. Right.
Okay. Fair call. Mr.
Right.
Subramaniam, appreciate you taking the time out and being with us today. Thanks so much for joining in.
Thanks.
Okay, that's the view from Sundaram Mutual. Okay, just looking at stocks, Navneet, Ultratech is now down 3%. The mixed bag numbers seem to have disappointed the street. Maybe the street was wanting for more.
Maybe, but I guess I was just looking at the details there, but the volumes picture, I think that's looking pretty healthy. I don't know, the net numbers may have disappointed or they're just about in line with street estimates. The stock's also fallen by almost 3%, but look at the volumes for the quarter, 37% higher, 16.7 million ton. I guess the expectation was somewhere about 14 to 14.5. I think the key question here will be how much of the capacity utilization of the JP plants now, they have, because last time also they indicated by the end of the year it will be between 60 to 65%. I guess in the last quarter they did highlight the plants of JP Associates which they acquired, the cement plants, they were functioning at a capacity of almost 40 to 45%. So EBITDA per ton, I guess that's the number, Neeraj, which has disappointed the street. That's declined almost 17%. And I'll tell you why that has happened. Because of the mix of JP and Ultratech cement plants. Because the JP plants, if you look at the EBITDA per ton, was way lower. The quality of those plants were not at par with Ultraset. So if you look at the numbers, blended realizations, maybe it's impacted because of JP's plans.
I would believe it's difficult to call what the rest of the cement street would do based on these, because unless I'm very wrong, the other set of numbers that came out last week, I think Shri, wasn't at all similar to what Ultratech has given. So mixed bag set of numbers for Ultratech, and maybe which is why there's a bit of a disappointment there. Shri Cement may be down today for other factors, but Ultratech is probably down because of that reason. By the way,
that's the most cost-effective player, Shri Cement.
Yeah, but their numbers weren't all that bad. I think the street was probably just a bit taken aback by
the acquisition
as opposed to anything else. And by the way, as we speak of numbers and reactions, Adani Port flashing on your screen, now the stock is down at the lowest point of the day. It's about 2.5% down is Adani Ports, 2%, okay. But that too dipped to the lowest point of the trading day today. So on a day when the markets seem to be doing okay, concentrated I might add, the rest of the pack, non-banking, isn't in a pretty spot. We now need to wait for Yes Bank numbers and maybe hope at those numbers.
You know,
Okay,
one common trend in Shree Cement in this number is, I think, the higher input cost, and that will be for the industry. The pet coke prices have gone up, the ban and everything is going to get reflected in the earnings. We did see higher cost for Shree Cement. They are 100% pet coke, that's a different deal, but even Ultratech uses around 60 to 70% pet coke. So higher input cost is what has impacted the earnings as well. That's the other factor.
Well, so that's the set of numbers. Bharti Infratel, by the way, the third one, 5.5% lower after the numbers were okay, but the outlook posted by the company wasn't the greatest, and that's why Bharti Infratel down about 5.5% in the session today. Commodities by and large seem to have taken a bit of a backseat. Okay, we'll put the spotlight on the Nifty in just moments from now as well, but keep in mind that the Nifty by itself, while maybe holding out, is holding out only on the back of 3 or 4 names and not really the market or the bucket at large looking very, very robust. But while the index, I mean, you may argue that it's a set of stocks or the whole basket, but the fact remains that the index has gained for a second day in a row now. And you know, who better than Pradeep to speak about whether this rally is seeing some bit of an exhaustion or no, and maybe some chart analysis out here. Pradeep?
Well, looks like, you know, the rally is kind of overstretched, and the reason being that, you know, targets, the best targets that we had in our mind, say with a midterm perspective, have already been achieved. So this is a longer term trend. Maybe before this, we should look at the short term trend. That will kind of give you the better perspective. If you could load the other chart, which is on the daily, you know, movement of Nifty. That will give you exact idea of what we are really talking about here. You know, what you do is we try and project certain figures and certain targets, and what is happening is that we almost crossed those targets in today's trade. So I think there's some technical problem. We're not able to load that chart. Okay, it's here. So here it is. Going by the recent movement, you try and project probable targets, and we have already crossed that target of 10,836 or something we had in mind. Now, what happens when you overextend the rally beyond such most likely targets? You would assume that short players are caught off guard. You'll assume that a lot of new buying will come in. But what's happened today? So if you go by the commentary that Navneet was making on FNO trade, in fact, what we see is that discount is building on Nifty, which means after such a breakout move, actually long traders are not looking more confident. It's the short traders who are trying to come back and increase positions in the market. That is what at least, you know, the FNO data is telling you. What is the reason behind that? And for that, if you look at the RSI, the oscillator, you can clearly see that Nifty has crossed the 70 mark on the higher side, and is moving above that. So market is overstretched for sure. Whenever it happened before this on daily chart, so it was here in November. See what happened after that. Nifty corrected. Even you know, on earlier occasions, whenever we reached 70, forget about crossing it. Whenever we reach 70, the market corrects. So market is stretched. But in a bull run, usually you don't take a bearish call just based on oscillators. You have to wait for confirmations, or you have to look at the longer term chart and then figure out whether it really makes sense to be cautious or think of booking profit and exiting. So let's bring in that long term chart we were talking about. If you could now move to the previous chart that we are showing, that's a monthly chart actually, and here it goes. So what is this? This is the 2008 bottom, this is the 2010 top, then this is 2015 top, and if you combine both of this, here we are. Almost 10,935 something. That is where the channel resistance comes in, and we have seen that in the long run, when you have you know, such a well-established channel, it's very, very difficult to cross that level. Again, on monthly RSI also, you have 74. That's a reading that I'm getting today, which means the RSI or all the oscillators are in fact overstretched. So maybe so far, Neeraj, I was kind of avoiding any kind of you know, bearish call on Nifty, but now I think my best targets are getting achieved. We are almost there today. If you look at today's high, 10,870 or something, now probably you have a very, very limited headroom going by this chart or the you know, the most bullish target expectation, the projection that one could make at this point of time. So that could be again the reason why on higher levels we are seeing some shorting and why discount is building in Nifty. So I'm trying to kind of explain why a discount on Nifty in such a bullish market, and this is the possible explanation
how
that
do
I
you
have.
decide when markets are at all-time high levels that this is the resistance now? I can see it in the options data, but how do you see that in a chart? I don't know.
So on oscillators, you have an RSI which is extended, which is stretched, and if you look at this channel, and even over the previous bull run, I had observed that well-established channels always played a very important role. And on such a long-term channel where you can see on the upper end we have 2 data points, on the lower end you have several data points. Now this is kind of a proven channel on which on the higher side you will face some resistance, but it's upward sloping, which means every month maybe by a few points your target may get revised, but there's a limited upside. So we are almost there, and that could be a possible reason why traders are so cautious.
Well, let's wait and watch. If the activity in the index today or indices is anything to go by, fundamentally, I wouldn't be best placed to speak about charts. There is inherent weakness except for a few names, there is inherent weakness. The Nifty is now down to the lowest point of the day as well, and the broader markets, as we've already spoken, are looking a bit weak in trade today. Anyways, what was not looking weak a few days back was this stock called Ducon Infra Technologies. It's a stock in focus. It's a stock that's seen, volatile moves, yes, but 41% gains in the last 3 months and some bit of pullback as well after the rallies that we saw a couple of days earlier. And now the reason why we've brought this up is because there are some notes which speak about how companies which are in this space of trying to combat emission control or trying to actually play along with emission control might actually benefit with humongous order inflows, because emission control equipment orders might finally start to kick in. It's a large opportunity over the next 5 years. Let's get in the chairman and CEO of Ducon Infra Technologies, Mr. Arun Govil. He joins us on the show. Mr. Govil, good having you. Thanks so much for joining in. Before we get to the crux of the conversation, pray tell our viewers, what does Ducon as a company do?
Thank you for having me on your channel. Ducon is a company which has technologies for FGD systems, which is going to be a big market in the next coming years, 5 years or so. And we established this company in 2005. The original flagship company is US-based company, and I saw the growth potential in India, and I set up this company at that time. And we had already executed almost 2,000 megawatts of FGD orders for Reliance, Lanco, and BHEL in the years 2007 and 8, before these norms were established. So we have a very good leading position at this point, and that's one of the main business. We also do industrial air pollution control business, and we also are in material handling and even infrastructure businesses at the present time.
Mr. Govil, I'm just going by the latest press release that you guys had sent to the exchanges. I guess the promoters are pledging almost 50 lakh shares to raise some money. Why are you taking that route to raise that money, and what is that money going to be used for?
We already have established lines of credits with banks, but the potential for in the next few years is huge. As we know, almost 130,000 megawatt of power plants will be installing emission control equipment, and each, the average price is anywhere from 25 to 50 lakhs per megawatt. Okay, and so we want to be prepared that we do not miss any opportunities. These are capital intensive businesses. They require large working capitals and bank guarantees. And at the present time, combined company, we have a turnover of about 420 crores. So the purpose of the pledging is to have enough funds available within the company. All the money that we will get would be loaned to the company, which will provide capital and when required to execute and secure these orders. And as we grow, we will secure more capital through other means and banking channels.
Fairly large set of orders that you're talking about, Mr. Govil. Would you be able to execute this yourself, or would the merging of the private limited company that you are en route towards be a conduit towards this execution? Because if I look at your revenues otherwise, they are not too large to execute the kind of numbers that you're talking about.
No, right now the public entity Ducon Infra is only having that IT business. I am merging my private company, which has 380 crores of turnover, which has the FGD technology, into the Ducon Infra. That merger is we are expecting to receive that order any day now. It has been going on for past almost year and a half. It has been delayed a little bit for reasons which are out of our control. But the company, private company, has executed on its own turnkey projects of 200 crores in size. So we have full capability. Once the merger is done, the final entity will have all the capabilities to execute these projects. And single size projects are like 200, 300 crores. So we are expecting a lot of potential in the coming years. So even if we can secure very few projects, we can literally double our revenue top line, and by executing these projects ourselves.
By the way, just a technical question. What does your shareholding go up to after merging this private company?
Currently, my shareholding in the public entity is 60%. After merging, I will own 71% of the company, and the rest is by the public. So I think shareholders can take comfort in the fact that their interest will be aligned with the promoter's interest. Okay, so since I control 71% of the company.
But since you don't want to miss out on new opportunities and you chose the route of pledging your shares, why don't you look out for a new investor? Since you're going to have a 71% stake, would you look to dilute some promoter shareholding in the near future?
I am open to all possibilities, and we are in discussions and talking to people, because 71% is a big stake, and I would not mind diluting a little bit and even issuing something from the company. So we are looking at all possible avenues, because there is chance we can get in thousands and crores of orders. So we would need a lot of capital for that. Yes, I'm open to all kinds of avenues.
Okay, what's the realistic, Mr. Govil? Thousands of crores is something that you can't predict really. What's the realistic order inflow that you believe Ducon Infra as a consolidated entity can bag in calendar year 18 or FY19 as the case may be?
Well, it's a very good question. The thing is, we are very busy with a lot of proposals to many clients, many customers, and we have, I would say thousands of megawatts of proposals outstanding. But as far as securing orders, that is not in our hands. That depends on the customers as and when they place orders. But I can assure you that we have capability for the size of company we are. Even if we secure 3 or 4 projects of 200-300 crore each in the first year or second year, that would be enough, because it will allow us to double our revenue. And this trend will continue in the next 5 to 10 years. So I think we are perfectly capable of executing.
I'm just taking a step back here. What were the total revenues in FY17 of the private entity? Because I know for the listed entity, it was somewhere about 40 to 45 crore.
Yeah, the private entity did 380 crores of turnover.
Okay, so let's say the total turnover now of the merged entity will be somewhere about 420, 430 crore?
Yes.
So what's the kind of growth that you expect on this 430 number now?
Well, it is very difficult. I think we have steadily maintained that type of revenue. So I can safely say it will be higher than that. How much higher will depend on when the orders come in. We are already in January. Our next fiscal year will start in April. And we have many opportunities out there. We also bid on not only power plant FGD, industrial FGDs for cement plants, refineries, fertilizers, steel mills. We also do pet coke FGDs. So those are smaller projects, 40 crores, 50 crores. So there are tremendous opportunities. And as and when these orders come, and how much of it can be executed in the year. So it is very difficult for me to sit here and say, oh, I can do 700 or 800 next year. It all depends when we will get, but the opportunities are definitely there. So in the next 2 to 3 years, we can count at least substantial growth in our top line. That much I can tell you.
Okay, we wish you all the best for that, Mr. Govil. Thank you so much for taking the time out and joining us and giving us that perspective.
Thank you very much. Thank you.
That's Ducon. With their thoughts, fairly bullish. The promoter is on the business. The stocks come off 4.5.
Shares is never a good sign, Neeraj.
they seem bullish about the business. Okay, Adani Enterprises numbers are out as well, by the way. Just before we get in our experts, EBITDA is dramatically improved from 622 to 900 crores, and which is why the margins are at 10% versus 7.2%. But the stock has come off. Wonder why. The revenue, net Hindustan Zinc numbers on your screen as well, and the net profit has come off marginally. Revenue is up about 18%. I would guess that there's a bit of a squeeze there on the EBITDA maybe. EBITDA is up about 16% too. Maybe Hindustan Zinc has below the operation line numbers which are playing havoc out there. Margins too, a bit soft in trade. A knee-jerk reaction, I would presume, for Hindustan Zinc. But Adani Enterprises is the interesting one. Of course, it's gone up quite a bit, but just bring up the number. Net profit 3.3% at 351 crores versus 339. I guess that's the disappointment. Revenue is up about 15%. Margins have expanded too, but the bottom line not quite. So maybe below the operating line expenditures out here, certainly for Adani Enterprises. I don't know if the interest cost is high or otherwise, but that's something that would have had these numbers look the way they are, because there is a 16% growth on top line and a substantial growth on the EBITDA front. One would have expected the bottom line numbers to look solid, but maybe, just maybe, below the operating line, there have been some disappointments there for Adani Enterprises.
No, yeah, you're right actually. On year-on-year basis, the finance cost has gone up. It's 450 crore versus 341 crore. But on sequential basis, there is a little bit of downtick, but we are comparing the numbers on year-on-year basis. So higher finance cost, higher other expenses too. That's 825 versus 700 crore, which was seen in the corresponding quarter. I think that these two factors may be weighing in on the bottom line. Let's see if there is some exceptional item here, but no, the taxes are also, the tax rate seems normal what it was last year.
Actually, no, quarter-on-quarter basis, the finance costs look okay.
Yeah, that's what I was saying. There's a downtick, but I think we're comparing the numbers year-on-year. That's
yes,
why. Other expenses and finance cost.
Yeah, actually you're right. Other expenses have gone up too materially. But strong operational performance by Adani Enterprises. However, the stock has come off quite a bit. I think the bottom line numbers and the way they are leading to a bit of a disappointment. 7% down now. I must say this is not turning out to be a healthy afternoon for earnings reactions, if not earnings at least. Ultratech, Adani Enterprises, Hindustan Zinc, I'm missing out on a number. One more number that came out, didn't come. Adani Ports, all of these are reacting quite poorly.
Adani
the set of
Power
earnings that are coming
tumbled
out.
Today in trade.
Yeah.
Adani Power is down 9%, I guess. Yeah, I think that started falling just towards the first half only of the trading session, so it's down almost 10%.
Well,
so the other point also is that, Adani Port and Adani Enterprises, if you look at the movement over last 1 or 1.5 months, the stocks have gone up quite a bit. So even a small disappointment could lead to a sharper correction.
you didn't see that much of a disappointment in Adani Ports, to be honest. But Adani Enterprises, I can understand.
Yeah.
And Adani Power, of course, came out of the dismal set of numbers.
That's the cash cow for the group, right? Adani Ports?
Yes, it is, but down 5% now. Let's get in Jai Bala. He's Chief Market Technician at Cash the Chaos. In a bit, we'll get in fundamental guys to speak about these numbers too. But Jai is with us to talk about his thoughts. Jai, good afternoon. Always good having you. Thanks much for joining in. I'm starting off with the micro, then we go on to the larger Nifty theme as well. But just on this set of numbers that have come out and the reactions that we're seeing on these stocks, too short-term in nature, I know, but the Adani Group, almost all the stocks getting pummeled today after the numbers. Any thoughts?
Yeah, see, Adani has had an excellent run all through 2017, and I follow the Elliott wave model, and under that model, it's completed a short-term, wave 5. So it's no surprise that it's coming off the highs 60 to 200. It needs to correct a bit of the entire move from 60 to 200. So if the markets are overall going to continue this, next leg as we are anticipating, I think this shouldn't be taken too much into a cause as a worry. I'm sure from 200 it's going to pull back somewhere close to 175, maybe even 160, but that shouldn't matter. It's just a correction in the for the run up from 60 to 200.
So that would be a deep enough correction here on Adani Enterprises that is possible. That is what Jai Bala believes. Well, Jai, moving to the broader discussion, how do you really see Nifty or Bank Nifty going forward? Nifty has in particular seen very high volatility over last 1 week or so.
Yeah, see, one thing Nifty has done is it took out the major resistance at 10,770. We saw it come off 10,770 that we had projected, and it's now taken out that. The next resistance is placed at 10,895 to 10,920, and it came very close to those resistance levels. But what the market has done in the short term, it's getting a little overextended. So it needs to shed a bit of weight. It's gained a lot of weight, and once it's sheds a bit of weight, I think it'll get rejuvenated, and we can look at the possibility of market climbing further record highs. But at the short term, it's getting overstretched. So it makes tremendous sense to at least partially book profits in the positions that you've been long since at least the last quarter. So it makes a very good sense to book partial profits, and you should play the rest of the move, which whatever is available and whatever is going to happen through your existing positions, not create fresh positions. Creating fresh positions, allocating fresh money to stock positions at these levels doesn't make sense to me.
In fact, Jay, that's the advice which most of our technical analysts have been giving us. Don't take any fresh long positions, but if you're holding, do keep a stop loss around the levels of 10,750 on Nifty at least. Jay, but what would be your top trading ideas today?
See, as I said, the way to play this market is through existing positions. I've been bullish on mid-cap IT for quite some time, almost for the past 13, 14 months. And my top pick has always been Tata Elxsi. And Tata Elxsi still remains to be, the best bet for me. Even what I expect, what Mindtree is doing today, to be done by Tata Elxsi tomorrow. I think it's going to surprise the market based on the chart position where it is at this point of time. I've been projecting it to cross a level of 1250 for the past 8 to 12 months, and I'm sure tomorrow the only possibility of that happening is that because it's going to surprise the market with good numbers, just like how Mindtree has done today. We saw the same thing happen for GM Breweries a week or so ago. So charts tell you a certain message, and to me, Tata Elxsi is very likely to scale record highs definitely within the next 1 week. And so because of that, I'm going to go long on Tata Elxsi with a stop below 1,000, somewhere close to 995, 997, and I expect it to cross 1250 in the extreme short term. And there's one more strategy here. Now, I've been bullish on UPL since the time it was about 690 to 710. We highlighted that strategy about, I think, 3-4 weeks ago. And now it's come and taken out the important resistance at 810. There's a sensible way to play this. If you follow the price action of UPL for the last 2-3 weeks, it's been stuck on a particular range. Now, today it's coming out of that particular range and telling us it's breaking out. And this is an indication that it's going to take out the resistance 850 and go to the record highs that we've been projecting. And so the sensible way to play is take a 860 call, and I expect this to be in the money within the next 7 days. It was trading at about 3 rupees when on my last check, and I expect this to triple to somewhere close to 9 at least. When the stock crosses 860.
Okay, Jay, in fact, I was going to take your view on UPL, which is the top gainer on Nifty right now, 805. But let's also bring in Vishvesh, Chauhan, Head of Quantitative Research at Monarch Networth Capital, who joins us on the show now. Hi, Vishvesh, good afternoon, and thanks a lot for joining us. Tell us, what are your top trading strategies currently, as most of the indices have come off day's high, where pressure point has been the broader markets, and Nifty's just about up with 40 points currently. Would you take any bet?
See, I think in a very short term, one has to keep in mind that what is actually happening. So in the last week or so, you have added close to about 1 crore shares in the open interest on the put side, which accumulated across all strike, I'm saying. Now, what has really happened that on a down days like today, from a day's high when we are coming off, you are not seeing much of the shedding in the put strikes. At the same time, you are not even seeing much of the addition in the call side. What it simply means that market is coming, like Bala mentioned, on its way. So it was probably because there is no enough enough buyer. People are very, skeptical about buying at a, such elevated level, so they are not putting their hand. At the same time, sellers who are willing to sell have to, lower the bids or lower the prices. So because of that, it comes off. Now, at the same time, I have a reason to believe that until yesterday, nobody was expecting a 10,800 in the current series itself. And right now, also, there is enough short sellers are trapped in the bank Nifty and Nifty. So if the market, pullbacks, probably those people will have no choice but to cover their position, and that will give some sort of a cushion to the market. Now, it is anybody's guess that what would happen in terms of the top or purely from a market perspective, but my guess is that right now it is very safe to assume that as long as we don't go below 10,700, buying on decline should be the strategy. Now, which stocks to buy? In my guess, Just Dial, which was offering a good amount of pullback until the yesterday, is now giving you an opportunity, as in it has come off. So probably if you are looking to hold stock for a month or so, or for that matter couple of weeks also, then probably current level makes a lot of sense to me, because I think 618 was a resistance from where it is offering us some sort of a pullback. So probably with a stop below 560, if you are looking to buy a Just Dial, then probably you can have a target of 678. Second, in my opinion, Dr. Reddy. Dr. Reddy currently around a 2470, a little bit of stop low for let's say 5%, and you can have a target of a 2800 rupees. And if I recollect correctly, on your other show, FNO show, I've been mentioning a Dr. Reddy option strategy. So probably what one can do is one can buy a 2500 rupees call option and sell 2700 rupees call option one lot, and sell 2800 rupees call option two lots. So what would happen? Your net outflow in the whole strategy, maximum risk of 9,000 rupees, and if the view plays out wherein the expiry comes anywhere between 2700 and 2800, you would make a 40,000 rupees, which is in my opinion a very nice risk to reward ratio, and it happened to be a very liquid side. So Dr. Reddy, Just Dial, and on Nifty buy on decline is what my view at present.
Okay. Well, what else? Just looking at the Nifty now, trading at the lowest point. I think the Nifty Bank too, trading at the lowest point of the day. And some of the high flyers, well, HDFC Twins are holding on, but Yes Bank has given up its sheen almost completely, half from where it was, and is still awaiting those numbers. I was of the opinion the press conference is at 3. Doesn't seem to be the case, because it's 246 already, and there are no signs of the numbers. Let's wait and watch what happens there. Oh, is that DB Corp numbers, or have I missed them earlier? DB Corp revenues and profit, all of them down. But the numbers came some time back, by the way, and the stock is down in the session today. But the broader end of the spectrum, a lot of pressure there. India Cements, I saw the last time, was down about 4.5 to 5 odd %. It's a day where we should talk about some of the losers. Jindal Saw is down 7.5. Ballarpur Industries 7.5. Adani Enterprises is 7.5, yes. And Just Dial and Intellect Design Arena, both of them corrected about 6.5 apiece. Pradeep was making this point this morning about how IT stocks selectively could have some pressure, and we've seen that selective pressure there. Mindtree is probably an exception to the rule today. Lancelot, Chief Investment Officer at ValueX, joins us right now on the show. Lancelot, good having you. Thanks so much for joining in. Seems to be a day of punishing some of the disappointments in results. Did you get a chance to look at any of the 3 or 4 large names that came out? There was Adani Port, Adani Enterprises, even Hindustan Zinc, by the way, which is getting punished post its numbers.
Yeah, I think, it has been, the market has been reacting that way, that whenever the numbers are disappointing, we see large sell-offs. We saw that in the last couple of days with, for example, MCX. When the numbers were not good, the stock has lost almost 15%. And seeing it now with Adani Enterprises and Hindustan Zinc. I think the numbers, the expectations were very high, especially because of the commodity cycle. And if you look at it overall, the numbers on an absolute basis are really not that bad, especially when you look at it from a perspective. But compared to the expectations that people had, that the commodity cycle is now rising and there'll be huge profit margins, etc., we are seeing the stock sell off on the back of expectations not being met. So I guess it is a day to market does teach us that earnings are what drive market valuations, and so one cannot forget the principle that we need to see improved earnings and improved growth, both in profitability and revenue, for market caps to move up. And it's not merely fund flows that is only going to be the long-term driver of valuations.
Well, the Nifty is now trading at the lowest point of the day. It's almost seems like it's getting ready to dip into the red, to be honest.
Yeah, but look at the broader markets, it's cut off almost 2%.
2% apiece?
Yep, mid cap and small cap, both of them have seen cuts of over 2% now, in fact.
Yeah, it's not turning out to be a great afternoon, Jay. We'll have to shift towards what's looking on the charts. By the way, the Sensex is probably doing just a tad bit better, maybe because of 2 or 3 names missing from the Sensex, which are playing a key part in the Nifty too. But Jay, for somebody who's missed out the call at the start of the show, is there a trade that you would initiate afresh on the index? The Nifty is almost on the brink of breaking into the red now.
Yeah, you've got to be really a high-risk trader to do this. I think there is a short opportunity here, but it's not the most low risk opportunity which I prefer to choose. But I think I see the index pulling back somewhere close to 10,500, maybe even 10,400. But that's just won't be an alarm for me. It'll be just a case of market shedding weight to record further record highs. So I would I don't know if this is going to be the start of it. The patterns are very choppy and overlapping. That's the reason why it's not that clear. But yes, it's coming off a significant resistance at 10,895, and the high was somewhere close to 10,880 something. So I would guess that the market is going to correct somewhere close to 10,500. If you're brave enough to go against the major trend, yeah, go ahead and short it. But it's not my ideal cup of tea.
Well, Pradeep, the Nifty Bank as
He's
well.
Smiling.
Yeah, Pradeep is smiling. If he was a trader, I would have said all the way to the bank, but that notwithstanding,
All the way to the screen.
all the way to the screen, yes. But well, that was an interesting chart. But the Nifty Bank too, guys. I mean, obviously, it is the Nifty Bank's doing, because of which this is coming off. All those gains that we had are coming off quite rapidly.
You know what, had it not been for ITC and the HDFC twins, we would have been deep in the red for Nifty, because the HDFC twins together have some 16-17% weightage, and ITC has been holding up in today's session. So otherwise we would have been deep into the red.
Yeah. Hey, so by the way, so for a lot of people who are wondering why we're talking about the Nifty Bank too much, just a quick mention from Shraddha as well, because it's a day for banking stocks with the news reports of the government contemplating to hike the FI investment limit. Shraddha is here with a quick detail, a quick snapshot of the banks and the levels at which they are currently on the FI front. Shraddha?
Well, yes, ideally, this is a very big positive for the banking sector overall if it gets implemented, of course. Why is that so? Because it would imply a significant increase in the banking sector weight in the MSCI index with the increased headroom. So you would see higher foreign inflows, especially for the likes of HDFC Bank. You would also expect large PSU banks like SBI, PNB and Bank of Baroda with C foreign interest to remain the key beneficiaries. Also, mid-size regional private banks like South Indian Bank, City Union Bank can turn out to be acquisition targets. Remember, they have no single large promoters in these banks. Having said all of this, RBI's comfort with such a change will be important to watch, because the last time around it was said that the RBI had rejected a similar proposal in 2015. So if we look in detail at the current foreign shareholding pattern in private banks, you would see that the foreign shareholding in HDFC Bank stands at 73% versus the limit of 74%. So that's the only exception where there is currently no headroom for further foreign buying. So HDFC Bank will benefit the most if that cap is removed. Even if you look at the shareholding for state-owned banks, SBI, PNB, BOB, all of these have foreign shareholding currently below that 20% limit. So not surprising to see that HDFC Bank stock is one of the largest banking gainers today. In fact, the only one, I assume, because it's the biggest beneficiary. Having said that, of course, any form of capital into banks will be more than welcome, because the needs for Basel III and Ind AS will only increase. But HDFC Bank clearly stood out.
Thanks, Shraddha, for all the details. And Nifty has slipped into red now, 10,785. That's the figure coming in. In fact, there are three stocks that completely turn the trend, I would say: HDFC Bank and ICICI. But for these three, 2 days back, maybe there was a clear bearish setup ready in the market, and we were anticipating a correction of under 200 points. So I think a view on these three would be very significant. Jay, if you have been looking at these three separate charts, Do you think there is way to go for these three? Can they still support markets at lower level?
Which were the three stocks? I couldn't hear it.
HDFC Bank and ICICI Bank. Three heavyweights that drive both Nifty and Nifty Bank.
I think there is definitely some steam left in ICICI. I'm not so sure about HDFC and HDFC Bank, but I think ICICI definitely has got some steam, and but it needs a little bit of correction in the short term to extreme short term, and then it's likely to take out and go past the record highs. And even State Bank, for that matter, which is also a heavyweight, I think the high it made was somewhere close to 350 after the banking restructuring news came out. I think even that will go close to it, and I think these two will balance the negatives within the sector. So I think there is some juice left in ICICI, but be a bit more patient.
Well, I think there's a major correction which has come in for the realty stocks. Pull up the Nifty Realty Index. It's down 4.5% right now. And major cuts have come in for stocks like DLF, Godrej Properties. And remember, these were the stocks which were actually inching higher in the past few sessions. So both DLF as well as Godrej Properties are currently trading at day's low. Lancelot, view on the realty stocks, is this a good opportunity to buy at these levels?
No, I don't think it is a good opportunity to buy because, obviously with the market moving up, these stocks have also moved up. And I think real estate is in structurally a period of consolidation, while so you won't really find that kind of sustained earnings growth coming in from these companies. So I think it's going to take a while because, when these stocks had sold off almost 7-8 months or maybe a year ago, that time they were probably attractive from a valuation perspective. Now the stocks have again turned to be, they are fairly priced, and unless earnings and can be sustained at a higher level, which looks difficult considering the news that we've seen about most of the new launches, the unsold apartments, the prices of real estate in various tier 2 towns as well as in the metros. So it looks a bit difficult, and at this point in time, maybe this is not the right time to start looking for bargain hunting in the real estate space.
It's looking very, very wobbly, all high flyers. So the ADAG group stocks, Reliance Infra, Reliance Communication, Reliance Power are down about 6.5% apiece. The Adani group stocks are down. GMR Infra and a clutch of these real estate names, as Navneet suggested, are down and out on fairly high volumes too, I might add. The cash market volumes should be interesting to look at in today's session as well. So let's wait and watch what happens. But this is smacking of some bit of a risk off. I'm not saying this is very deep in nature, but some bit of a taking money off the table amongst names which could be high beta in nature. That's the screen certainly looks to be telling that.
You could add just dial to the list.
6.5%, 7%.
7.5% in last 10 minutes or so.
I think, this was a counter which was going up also in the last few days. So
11% down now.
I think the trend is clear. There's some profit booking which is being taken at higher levels, and the volatility that one is seeing for Nifty, Bank Nifty, it's also the day for the weekly options contract to expire for the Bank Nifty. So probably because of that, some adjustment is taking place.
Yeah. Let's wait and watch. But what we should do is maybe take a quick break on this side. On the other side, we talk about the Fab 4 stocks of the day, though the mood has turned somber, but never mind, we'll try and talk about the Fab 4, tell you what dealing rooms are recommending in the session today, and of course, some closing strategies from both Vishvesh as well as Bala.
हमारे पड़ोसी मेहताज हॉलिडे के लिए अब्रॉड गए हैं। हम कब जाएंगे?
उसके लिए पैसे कहाँ से आएंगे?
लेकिन मिट्ठू इन्वेस्ट और उस पर इन शुक्ला जी की जिम्मेदारी छोड़ गए हमारे सर।
एफडीज में इन्वेस्ट करूँ क्या?
अरे मिट्ठू जी, आज के जमाने में इन्फ्लेशन के बाद एफडी रिटर्न से हाथ में क्या बचता है? ईटीएफ में इन्वेस्ट कीजिए, जिससे लॉन्ग टर्म में मिलते हैं स्टॉक मार्केट जैसे हायर रिटर्न्स, यानी इन्फ्लेशन का कम असर।
लेकिन स्टॉक मार्केट तो ऊपर नीचे होता ही रहता है।
ईटीएफ लॉन्ग टर्म इन्वेस्टमेंट के लिए बिल्कुल उपयुक्त है। ये देखिए, हायर रिटर्न्स, इन्फ्लेशन बीटर, and no taxes. ETF में निवेश कीजिए और देखिए हाथ में कितना बचता है। भाभी जी जरा कोकोनट ऑयल देना।
ETF investments are subject to market risks. Read all scheme-related documents carefully.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
What do we want from our country today? From the economy, from the politicians, the policymakers? Do we want a better deal?
Maybe more perks for smaller businesses or large businesses or any businesses.
Do we want it to be easier to create something new?
To find the job of our dreams, to create jobs for dreamers.
Do we want growth? Not just for the sake of growth, but for what it represents.
Not just numbers on a graph somewhere, but prosperity that we can see, touch, feel.
These things we want.
Can we expect them realistically?
It's time. Time for us to accept less and expect more. Time for us to get on the path to confidence once again.
Time to go from making promises to keeping them.
From manufacturing slogans
to really making it in India.
From a promising economy
to a delivering economy.
Can this budget mark a return to confidence?
Watch Budget 2018 with Bloomberg Quint. Yes Bank, the numbers will come up on your screen, but from whatever little I gather, I think the bottom line is slightly better than what we were working with. Let those numbers come. The PAT is at 1,080 crores, right? So at 1,080 crores, it's marginally higher than what we were working with. We were expecting a 20% growth. I think it's coming higher. But wait for the asset quality numbers, really. That will determine. We have the asset quality numbers?
The net NPA is at 0.93% versus 1. So there is an improvement with both gross as well as net. The gross NPAs are 1.72 for the third quarter. Sequentially, I'm comparing with the September quarter, it was 1.82. So on asset quality front, there has been an improvement, but I guess we need to wait for the other important metrics, the loan growth, the NI number and everything. Probably those numbers may have disappointed because the stock is right now is in the red, but let's not forget the stock was going up ahead of the numbers, so this could also be a bit of profit booking, which is also seen post the numbers have come by. But as of now, the profitability, as Neeraj highlighted, is above what the Bloomberg estimate was throwing about. 1,076 crore is the number. Our poll was throwing 1,062. We'll get you the net interest income for the quarter, which our estimate was somewhere about 1,935, a growth of 28%. We'll be getting you that numbers shortly, but I guess we've got an analyst, Asutosh Mishra, senior research analyst at Reliance Securities, who's joining us. Hi Asutosh, what are you making of the initial numbers that we've got of Yes Bank? On the asset quality front, there seems to be a bit of improvement on sequential basis.
Yes, asset quality front, they have shown an improvement, but on a core operating performance, there is some subdued performance. So NI, our NI estimate has missed. But overall, if you look at the numbers are in line with our estimates. So
what was the NI you were expecting, Ashutosh?
So we were expecting an NI of 1972.
Okay. And anything that you're gathering in terms of loan growth, which I guess the street was estimating somewhere about 30%?
Loan growth, still we have not the numbers with us.
Okay.
Loan growth number is still with us, but what we expect, the loan growth will remain good for this quarter for many of the private sector banks because of the lower base impact of the demonetization.
Okay, the NII I think is coming at 1,889 and our expectations were 1,935. NII is slightly lower, if I'm not wrong, than what the estimates were. Ashutosh?
Expenses is higher. So they still are maintaining higher provisioning expenses compared to what they are there.
Okay, Lancelot, any thoughts on these numbers, the initial numbers that we've just spoken about? Okay, I think we just lost Lancelot as well. What's the call, Asutosh, now on Yes Bank vis-a-vis some of the other private banks? We don't have any other announcements right now. I would presume the ghosts of Q2 are done away with. What are the Yes Bank vis-a-vis some of the other private banks? What's the call?
Forward Yes Bank with other banks at this point of time. There are 2-3 differentiating factors for the Yes Bank. Number one is that we don't see any major asset quality shock in the terms of RBI, QR, which is behind the bank. Many other corporate bankers still that problem is there. Like ICICI Bank, we still have not got number, and many other public sector corporate public sector banks we have still not got the divergence number. So that is behind the bank. Okay. On the growth front, they are delivering quite a healthy growth. So overall, profitability growth will remain stronger. So even slight increase in the NPS will take care by the higher provisioning, strong growth in operating income.
Right. The provisions, I'm just looking at them, is 421 crore. And if I look at the absolute number of the NPAs, the gross is 2974 versus 2720, which was there in the September quarter. Even the net NPA, the absolute number is higher, which was seen in the sequential quarter. It's just the percentage which has fallen. Do you think that's the number which may have disappointed the street?
It will be, see, if you look at overall basis, we were expecting that the absolute number will be higher, but because of the loan growth, stronger loan growth, so it's clearly demonstrating that the loan growth is quite strong, so that the ratio will come down, has come down.
Okay, I think Shraddha is also with us, so let's just take an initial take from Shraddha as well. Shraddha, what have you made of the number?
Well, like you all have already discussed, Neeraj, as far as the basic numbers are concerned, net interest income is slightly higher than what we were expecting, is slightly lower than what we were expecting. Net profit has come in at 1,077 crores versus the number of 1,062. So you can say it's broadly in line. Net interest margin has come in slightly lower at 3.5%. We are working with a 3.6% sort of a number. If you look at the other operational parameters, advances have seen a very, very strong growth of 46%. Deposits and CASA growth continues at 48%. That's another positive. If you look at the gross NPA number, it has come in slightly lower. There's an improvement of 10 basis points at 1.72% versus 1.82% in the September ended quarter. Even if you look at the credit costs, there has been a marginal improvement there as well. Remember, in the last quarter, the credit cost had spiked up to 29 basis points. And so the total credit cost for the first half of the year stood at 48 basis points, whereas the management had given a guidance of 50 to 70. And last quarter, despite the big gross NPA divergence that was reported, they had maintained the credit cost guidance. So in this quarter, it has come in at 18 basis points. That means for 9 months it stands at 64 basis points, so which only leaves about 6 basis points room for the next quarter. So probably we will see the management revises slightly upwards. And even with respect to the RBI review for FY17 that had led to the stock slipping last quarter, they have updated and they have said that they have received a total repayment of 450 crores on those loans. So broadly, at least for the first look of it, the numbers do seem to be decent and in line, because this quarter most of the analysts that I had spoken to had actually said that they're not expecting any negative surprise as far as asset quality is concerned, and whatever was to happen would have happened in Q2 itself.
Certainly haven't gotten a negative surprise, Shraddha. Okay, Dhananjay Sinha is joining us on the phone line as well. Dhananjay, really thanks for taking this call. It could be extended to almost all earnings today, but let me just start off. If you have some thoughts on Yes Bank, since banks are in focus, pretty decent set of numbers, but most of the stocks that are reported have slipped in trade today.
So I think, see, with respect to the Yes Bank result, I think it's good result. I would term it as good. It's generally been in line with respect to the profit growth and PPOP growth, and with respect to asset quality, also not major surprise. There is a 9% increase in GNPA Q on Q, so there is no negative surprise there. And I think the bank has, within that, the slippage has been about 495 crores, which is also fine. It's largely coming from the SDR. So there is no significant fresh slippage or that's happening there. And overall profitability has been pretty strong. Net interest income growing by 25% year on year, and PAT growing at 22%. I think the positive surprise has been a very robust growth in the AU, the balance sheet, with loan growth of 47% year on year, and year on year deposit growth of 30%. So I think with respect to operating performance, this is a good result, I would say. Over a period of time, I think this should feed into better profit outlook going forward.
The bank has stabilized a bit, so maybe Navneet was right. It was the weekly expiry that might have been playing some part as well in the volatility. Dhananjay, having said that, the private banking numbers thus far, and Yes Bank is pretty much toeing the line, I believe, of what some of the other peers have done so far in the likes of IndusInd Bank, for example.
Right. I think this quarter, I think the credit growth has been better, and systemic level credit growth has inched up to almost like 11%. And with private lenders actually growing at this pace, implies that even in the recovery that has happened from a level of something like that, for private lenders may have actually increased. So I think, notwithstanding the view that people have made, the government announced the.
Right. Dhananjay, what's the house call on Yes Bank, and would you revise any sort of target or rating post the numbers?
Hold over a period of time, but by that time, the market share of private lenders will continue to rise. So I think that's a good thing, and I think that's probably in line with our expectation. And with interest rate hardening, I think it is important to understand that many of these banks who may be better off in terms of ALM, asset liability management, may be actually doing better in terms of margins and also profit growth. So that is the broader view that we have with respect to what could be happening in the banking space. And I think important thing that we will have to really take cognizance of is the fact that yields have actually hardened. G-Sec yields have hardened quite a bit. Now 10-year is closer to something like 7.5%, and it's an increase of almost like 110 basis point over the last, let's say, 6 odd months. So I think this quarter, December quarter, many of the PSU banks will have a problem with respect to trading losses, because earlier on, when the yields were falling, PSU banks had increased the SLR ratio. So the turnaround in the yield curve would imply that there would be trading losses, and with a lower with still a low growth as far as loan growth is concerned, I think their operating profit may not be so strong to compensate for the trading losses. So I think that is something that we'll have to really see how the PSU banks perform over a period of time as the results pan out. I think so that is broader. That's a broad level expectation.
Well, there was some bit of panic post the numbers came. As you can see, the stocks actually recovered. It's down only 0.5%. It went down 2%, and it was trading in the positive territory for majority of the session. Dhananjay, before I let you go, what's the house call on Yes Bank, and what sort of target price do you have?
I'll have to dig that out right now, so I don't have it handy with me.
Okay, no problem. Thanks a lot for joining us and taking us through your analysis of the Yes Bank numbers. And the NIMs are actually at 3.5% for the third quarter, which is coming in the press release. Okay, that's about the Yes Bank numbers. The markets have Bank Nifty is holding above the mark of 26,550 right now, but the markets are clearly off day's high, and we've been mentioning the pressure point has been with regard to broader markets. So let's get in our next guest on the show. Mayuresh Joshi, fund manager at Angel Broking, is joining us on the show now. Hi Mayuresh, good afternoon. We're getting a lot of numbers today. Yes Bank, Ultratech, Hindustan Zinc, and clearly the street. The numbers of Yes Bank looked okay, but there was a bit of selling pressure which came after that. Did you get a chance to look at any of these numbers?
Well, I'm looking at them right now, Navneet, and no negative surprises as far as I see from all the key parameters that we probably look at. So advances growth has been stellar for the bank in this quarter. With respect to asset quality, I think the pressures that it faced because of the divergence issues in Q2, I think some lag effect was expected to carry through in Q3. which is duly got reflected in terms of what they've probably recognized. And again, the credit costs at 18 bips, which takes the 9-month credit cost at 64. So there might be some uptick in terms of the upper range of the credit cost, which they had maintained at 70, to actually move up to 75 to 80 odd bips. But that does not significantly change the trajectory in terms of how the growth is happening for the bank. Secondly, in terms of their core asset quality issues as well, I think the recognition that they've done and the expectations of doing some upfront provisioning as well in terms of what can actually be reported in terms of the audit that RBI does in terms of divergence. I think that probably means that the kind of provisions that we're looking at can get maintained even in Q4. But I think NIMs have been exceptional, the cost to income at 39.5. So nothing to complain. My basic sense is that post the con call, probably you'll get far more clarity in terms of what the management is looking at, specifically issues surrounding asset quality and credit cost. But the numbers look prima facie very, very good to me, at least from a reporting standpoint.
That's interesting. Okay, some stability, but certainly off the highs of the day. Bharti Infratel is the big loser. The next worst loser is Adani Ports, which is down about 4%. Then the Hindalco's, Ultratech Cements of the world. But as you can see, the top 4 stocks, at least 3 out of the top 4 stocks, are stocks which are reacting to their numbers. What did you make of Ultratech, Mayuresh?
So afternoon, Neeraj. I think if you clearly look at the volumes that they've posted, obviously higher volumes because the utilization levels at the JP plant have moved to 60 odd percent. Now, if you do a standalone calculation in terms of reported EBITDA for their standalone plants and the JP plants, obviously the JP plants have a lower EBITDA per ton, and that's got clearly reflected both in terms of elevated input costs as well as the freight and logistic costs actually moving up. So I think the volumes were higher, which probably showed in terms of how the top line growth was. However, I think the realization growth was not commensurate with the kind of volume numbers that we saw. And because of lower margins from the JP business and elevated input costs, you probably saw that margin hit taking place. So as they ramp up the JP operations, my own sense is that margins might just stay around this range. But genuine demand recovery and government push through, I think, is going to be a huge kind of factor for cement companies. Where Ultratech and JP plants operate out of, I think realization growth should start coming back over the next few quarters. The obvious reaction in terms of the stock price moving up and valuations of the EV to ton probably looking a little bit stretched at the current juncture is probably what prompted the stock to correct. But large element is that with government push through, I think as synergies start building in, I think the utilization levels of JP plants will obviously dampen the kind of margin performance, but the longer term structural story still continues to stay. So I think not overly disturbed with what Ultratech posted, and largely I think it's been the stock price movement over the past few weeks where money is being probably taken off the table at this point of time.
Look at Growth Finance, sudden shooting up of the stock, 614 now, and counting on Growth Finance. So big move there, 613, yes, sudden spike there. Anyways, we'll talk more about this in a bit. First, what are dealing rooms saying, and of course what's happening in the F&O space as well. Okay, let's start off with the quick check on what could move in and out of the F&O ban. Navneet?
Well, Neeraj, one stock which may enter is DLF. That counter has seen some open interest addition on the futures as well as a couple of the option strike. And as you can see, yesterday, the total OI was 91%. For a stock to enter into the ban, it has to breach the 95% mark. But there are a lot of stocks which are at the borderline to come out of the F&O ban period. One of them is JP Associates. The counter is also down nearly 7 to 8% in today's session. That's telling you there is some unwinding which is taking place there. The other one is Jindal Steel and Power. Total 82% OI yesterday. So that could breach the 80% mark to come out of the F&O ban, and Capital First and Reliance Power. So these 4 stocks are the one which can come out, and DLF is the one which could be a new entrant into the ban period for tomorrow.
Okay, so that's the update from F&O space, but let's see what dealing rooms are actually doing at this point of time, and what is the fresh update from there. Yatin and Darshan both join us with fresh details from dealing room.
Yeah, so Pradeep, Yes Bank, they came out with earnings, but the kind of feedback analysts are talking about, the numbers are largely in line with expectations, and most of the dealers are expecting some profit taking to happen in the banking stocks, especially today also from the peak we saw some good correction in Bank Nifty. So dealers in such scenario, they are looking to short some private sector banks. So Yes Bank is one stock wherein they are recommending a STBT. Apart from that, watch out for TCS. This is one IT stock wherein FIs are buyers, and in general we have seen beat mid-cap IT, beat large-cap IT. We have seen some institutional buying flows as far as the entire pack is concerned. And finally, the cash market segment, watch out for Gujarat Heavy Chemicals, GHCL. That is one stock which is on HNI radar from the accumulation point. But Darshan has a few more stocks.
Yeah, so India Bulls Housing Finance is one of the counters which is doing fairly well for itself in trade today. It's moved after a long time. There has been steady accumulation. A large domestic mutual fund is actively accumulating the counter today. So India Bulls Housing Finance is the first stock. Again, UPL is also doing well. A foreign brokerage is actively pushing this stock to its clients. So this is something that's been watched out for. And Axis Bank, over the past few days, has a decent run. Today, its flattened trade has come off significantly from the day's high. Some of the HNIs are actively accumulating Axis Bank at lower levels. So this is what we hear from dealing rooms.
Okay, thanks a lot, Darshan, as well as Yatin, for bringing all those details. Let's just pull up ITC. The numbers come out tomorrow, and I guess the stock right now is trading almost at day's high. Remember, this has got not at day's high, but still right there at 273. This is a stock which has almost 6 to 7% weightage on Nifty. Mayuresh, I'll come to you. HUL numbers were pretty good, but we all know this is the low base effect which is working for these FMCG players, but particularly for ITC, which trades at a huge discount compared to HUL. Almost about 25% discount. What are the expectations here?
So I think clearly, Navneet, what you're looking at is volume degrowth, specifically on their main cash cow business of cigarettes. But what gets compensated is the price hikes they've taken, both in terms of the sub 64 mm cigarettes and cigarettes above that length as well. So to a large extent, I think the revenues shall get protected even if we see volume degrowth because of the huge inelasticity from the demand side. On the cigarette business. When it comes to the other businesses, I think we're probably expected to see reasonable amount of growth happening. The hotels business might just show signs of pickup. The agro trading business also should show significant signs of pickup. And the other businesses, though they contribute significantly lesser than what the cigarette business does on the EBIT level, I think the kind of capital investments that are probably going into the other businesses, you're probably going to see far more value accretion happening over the next few years. But from a quarter's perspective, I think volume degrowth from the cigarette business, margins expected to remain constrained. But a large element in terms of what probably comes through in terms of syntax, or what has come through in terms of syntax on GST Council meets, I think there is a significant amount of clarity happening on that front. And as you're rightly pointing out, I think the valuations look extremely cheap. However, for the next 2 quarters, because of the stagnation of growth on all these aspects, my own sense is that the stock might probably trade in the range of 7 to 8% tops, higher and lower from the current level. But again, I think for a long-term investor, any decline becomes a good buying opportunity. So I think it's a good qualitative stock that one can buy if it declines significantly and can hold on for the next 1.5 to 2 years.
Best thing is that ITC won't fall after budget this time, most probably, because of GST.
No, yeah, won't. Safe assumption.
Something is happening with the ADAG pack. Look at Reliance Communications. Stock has lost around 5% in last 5 minutes or so, down 11% for the day. Reliance Naval down 3% in last 5 minutes of trade, down 7% for the day. Look at Reliance Infra, Reliance Capital. What has happened? Entire ADAG pack is just crashing. So that's, you often see that in high beta stocks when they go up one way just like that, and they come down also with the same momentum. But it's also telling you something about
the mood of the market?
Mood of the market and ability of traders really to hold on to their positions, because we concentrate more on Nifty. But if you look at the entire market over the last 4-5 days in this heightened volatility, several stocks have in fact gone one way down. And is there some margin pressure or something like that? I mean, let's not speculate, but looks like, there is some kind of forced selling coming out with momentum.
You bet. Vishvesh, what have you observed in these? We'll also take in your closing strategies, but let's start off with the ADAG group stocks.
See, I think it is very volatile at per se, and the only strategy which I can think of in the this kind of thing is that when it comes down, probably what you want to do is you want to employ some sort of a strategy which involves some sort of option selling in terms of the implied volatility. Now it is a very specialized job, and if I'm speaking through your medium, and if the retail traders listening to it, it won't be a very materialistic for them because it involves a lot of technology per se, and at the same time understanding of option market. So the best thing which I can suggest from a trading perspective is that you can avoid in a shorter term. Yeah, but from a long term perspective, in my opinion, Neeraj, I don't know how much value there in terms of the fundamental, but technically I think the stocks have had a very good structure now. So if RCOM comes to 26, then first one thing which you should probably do is you should create a long position with a stop below 24 odd, and you can expect a target above 30. Same goes for the R level. I think if around current level, my guess is that with a couple of rupees stop loss, you may want to punt for again move higher. Though this is purely trading, and it has nothing to do with the name of the company. It is purely on the basis of chart, and I might be emotionally detached with my position when I put a stop loss in the system. So my guess is that the kind of momentum we saw from the lower lows, I think right now it is offering an opportunity to buy.
Okay, so that's the call coming in on AD Pack. By the way, Mayuresh, I mean, have you observed something like this as well? And you are not directly into broking, but you work for a brokerage. What kind of feeling is really there? Do you think there is pressure? It's difficult for some of the over-leveraged investors really to hold on to their positions given the kind of volatility we have seen?
Absolutely, no two ways about it, I think. But our risk management system probably is taking care of a lot of clients not having that kind of a situation. But yes, I think cases where I think the over-leverage situation is there and this kind of volatility does not help it. And does that trigger margin calls? Probably yes, in a few of these cases. But again, I think a large element of the market is probably looking at any sort of a correction to probably get into the market, because the market is climbing any wall of worry that is being afforded to it. So to that bit, yes, I think a few positions where over-leveraged positions probably exist, yes, a few margin calls could have got initiated.
What about closing strategies, Vishvesh? If you had to give a closing strategy, some trade that people can initiate now, either on the index or a specific stock, which would that be?
See, I think right now you are at a volatility in some of the stocks where it wouldn't be, very wise to buy an option. So I was, if you would have asked me prior to result what we did on our prop desk or what we advised to our client, we did a short strangle on the Yes Bank with a, 340, 360 strikes, and that was quoting at a 57 IV, and post result right now it is quoting at a 49. So that is a good Vega play which we were recommending. Now I think Dr. Reddy is something which is on our radar, and that is something I would like to do. A 24,500 call option, one lot. In order to compensate the cost, you go ahead and short 2,700 call one lot and 2,800 call option two lot. It may sound a little complicated, but it's not. It's just a ratio spread with the ratio spreaded to the 2,800. Net would be credit of roughly about 30 rupees, and my guess is that in this expiry we may see a very sparkling move coming in the Dr. Reddy. Another trade which comes to my mind, and right now the kind of levels we are at, I think Torrent Power with a stop below 285 could be a very good play, and you can look a target of 320 on the higher side. And on an index, I think the calendar spread is what I would suggest right now. Sell current month's 10,800 call option and probably buy February month 10,800 call option. My guess is that you are right now at the level where we won't see much of the movement, and theta would be eroding very fast, so you'll be able to make some money out of that.
Okay. Stay on, Vishwesh, stay on, Mayuresh. Let's start wrapping up the markets and hand it over to Pradeep to talk about the large caps. Afraid, Pradeep, you wouldn't be as upbeat if you were a bull looking at the close compared to what you would have been if you were looking at the start.
Yeah, so I'm neither a bull nor bear. I just look at the markets and say how they really are. And what I can say today is Nifty at 10,815 is down 70 points from day's high. Nifty Bank also, it's remained positive, but it has given up most of the gains, I would say, up just to 50 points now as we approach 330. And look at what has happened to mid cap and small cap. Let's bring in those two indices. Yeah, look at the small cap down 2.5%. That is really where the pain has been, and that's what we have been discussing over the last few minutes. So Navneet will talk more about that, but let's look at the composition of Sensex as we see it now. ITC after a long time has come forward in supporting the index. HDFC Bank, ICICI Bank remain constructive. So this is a pack which is kind of supporting the indices. On the other side you have Coal India, Tata Steel, Adani Port, SPI down 1.5%, Tata Motor, DVR. So it's 50-50. Interestingly, for last few days we had seen that a few stocks used to drive the index while the breadth remained negative, but today is almost 50-50 and index remained volatile.
Pradeep, there was a lot of selling pressure that was witnessed in the broader markets, but let me start off with a stock which stood tall throughout the session on back of strong set of earnings. So Mindtree is the one I'm talking about. Stock at fresh 52-week high, good set of numbers, margin expansion, and also Analyst giving a thumbs up. And as you can see, the stock closing also almost around the day's high levels with 9.5% gains. The other earnings reaction was Hindustan Zinc, which came out with its numbers today, but the stock closed almost at a day's low, 4.5% down, and the numbers did disappoint the street a bit. In the last half an hour of trade, you did see Group Finance going up in trade, so that had a good session despite of, mind you, broader markets turning pretty weak. 10% gains, almost 10% gains for Group Finance, and Sanghi Industries is the other one which rose in the second half of the trading session, and that's closing with a day's high. 137 is the level where it would be closing around, so 6% higher for Sanghi. PG Electroplast is the other one which rose today. That was up almost 9.5%. Let me start off with the losers now. Just Dial. That stock collapsed, and mind you, this was a stock actually which was going up in the last few sessions. So when the markets came under pressure, you did see stocks which were going up. They were the first ones to come under pressure. So Just Dial down almost 11%. Adani Group stocks were down and about. Adani Ports came out with the numbers, but the street was not too gung-ho about them. So 3.5% lower there. Sharper cuts seen for Adani Power. That counter was down since the morning session, actually throughout the day. It's closed with cuts of around 10% there. Den Networks from the media space, that too came under pressure. That's closing with cuts of almost 8%, again at day's low. JP Associates is the other one, a high beta counter in the futures and options market. That too closing at day's low. So as you can see, these are the high beta stocks which are closing at day's low. May not be a great sign. The other group which came under pressure was the Anil Ambani group. So pull up stocks like Reliance Communication, Reliance Power, Reliance Capital, all of them saw cuts of between 6 to 8 to 9%, Neeraj.
Okay, I'm told the Yes Bank presser should be starting any moment. So when it starts, we'll cut to it straight. But while we wait for that to happen, I'm sure my producers will alert me when Rana Kapoor starts speaking. But this is what the index has done. And it's fallen off completely, as we've said, throughout the day. I just want to mark 2 or 3 key statistics before we take in final thoughts from our experts. 1, the volumes. 2, the market breadth, and which was looking terrible at 2 and would have worsened during the course of the day, but should come up on your screen. 1, the volumes. Wow, NSE cash is at 41,000. This must be the highest that I've seen in a while.
I am presuming, Neeraj, yes, it should be the highest ever volumes that we've seen. That's barring all the block deals or whatever which takes place. But I've never seen a number like this on a normal day.
Yeah.
41,000.
And
even the FNO volumes, considering it was just the day of the bank Nifty options expiry, not for all the contracts, it is definitely on the higher side. And hence that volatility, Neeraj, that we saw in the second half of the session today.
But just extreme volatility, yes, but the volume substantially higher. And there, the yawning gap, the advanced decline ratio is substantially in favor of the declines. Not surprising here, but just making a point that this is not the kind of advanced decline you have on a day when the Nifty bank is up 2% and the index is up 1% at the start of the trading day. So it just shows the extent of reversal that has happened. And if you just look at the contributors list, we mentioned this, had it not been for the HDFC twins and for ITC, which are the heavyweights, sure enough, Kotak Bank, etc. have participated, but the HDFC twins and ITC are the ones which are really leading, which are helping the index stay up. Otherwise, we would have been down and out in the session today. Okay, final thoughts from our experts. Vishvesh, a quick thought. Are there downside levels that you envisage on the bank Nifty? We haven't quite talked about that today.
So my guess is that Neeraj, few session backs, if you would have asked me this question, I would have given you the answer that while the bank Nifty was lagging and it has broken above the key resistance, probably what you are looking at is much higher level. Now in today's session, the kind of sell-off which we saw from the higher level is probably exact reverse of what it was happening a month back. What was happening month back is that broader market was surging and index was right there. So if I recollect 2008 memories, and probably you may have the similar thought, that it may happen that the broader market tend to top out 2-3 months in advance compared to the benchmark indices. So distribution has to happen if there is a major top, and right now if you call it a day of a total top, in my opinion, then I am not going with the thought that this may be the top. Probably it is a good idea where the people may have booked a profit because of there is too much optimism. So there is no distributions. If I am a large investor and I have a 100 crore portfolio, then I have not yet got the time to square off my position in order to distribute it in a profit. So all I had to do was I had to lower my bid and I have to sell it even in a some point where I can lose a 4-5% on a straight portfolio. So my guess is that there is a definitely time for it to call it a top. And as far as the bank Nifty is concerned, my guess is that as long as we do not go below 26,000, which happened to be the very, very critical level from an options perspective, I don't see that we are looking for a major decline. In my opinion, we might head higher towards 27,000 also.
Let's wait and watch. Thanks a lot for that, Vishvesh. Mayuresh, in your portfolios, are you now, after today's move or otherwise, wanting to sit on a bit of dry powder?
I think we are sufficiently sitting on a reasonable amount of cash, Neeraj. And again, a large element is that any deep corrections that come through, I think qualitative stocks is the way that we look forward to invest. And we will invest in a very staggered way. So I think no two ways about it. I think our sense is that not expecting a deep gash into the market, but whatever opportunities the market does give over the next few weeks on the downside, I think we might probably lap it up to deploy the cash that we probably got in a staggered way in qualitative stocks.
Great. Mayuresh as well as Vishwesh, gentlemen, many thanks for joining in today and giving us your thoughts. Appreciate you being with us today. Well, that's the view from our experts. Take a break. Come back with some post-closing analysis and some top stories for the day.
हमारे पड़ोसी मेहताज हॉलिडे के लिए अब्रॉड गए हैं। हम कब जाएंगे?
उसके लिए पैसे कहाँ से आएंगे?
लेकिन मिट्ठू
इन्वेस्ट
और उस पर इन शुक्ला जी की जिम्मेदारी छोड़ गए हमारे सर।
एफडीज में इन्वेस्ट करूँ क्या?
अरे मिट्ठू जी, आज के जमाने में इन्फ्लेशन के बाद एफडी रिटर्न से हाथ में क्या बचता है? ETF में इन्वेस्ट कीजिए, जिससे लॉन्ग टर्म में मिलते हैं स्टॉक मार्केट जैसे हायर रिटर्न्स, यानी इन्फ्लेशन का कम असर।
लेकिन स्टॉक मार्केट तो ऊपर नीचे होता ही रहता है।
ETF लॉन्ग टर्म इन्वेस्टमेंट के लिए बिल्कुल उपयुक्त है। ये देखिए, हायर रिटर्न्स, इन्फ्लेशन बीटर एंड नो टैक्सेस। ETF में निवेश कीजिए और देखिए हाथ में कितना बचता है। भाभी जी, जरा कोकोनट ऑयल देना।
ETF investments are subject to market risks. Read all scheme-related documents carefully.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
What do we want from our country today? From the economy, from the politicians, the policymakers? Do we want a better deal?
Maybe more perks for smaller businesses or large businesses or any businesses.
Do we want it to be easier to create something new?
To find the job of our dreams, to create jobs for dreamers.
Do we want growth? Not just for the sake of growth, but for what it represents.
Not just numbers on a graph somewhere, but prosperity that we can see, touch, feel.
These things we want.
Can we expect them realistically?
It's time. Time for us to accept less and expect more. Time for us to get on the path to confidence once again.
Time to go from making promises
to keeping them.
From manufacturing slogans
to really making in India.
From a promising economy
to a delivering economy.
Can this budget mark a return to confidence?
Watch Budget 2018 with Bloomberg Quint. Okay, while we wait for the Yes Bank numbers to come out, let's talk about some key numbers that will come out. HCL Tech will report its third quarter numbers. Let's go across to Agam to try and figure out what will the company do tomorrow. Agam.
We're expecting a quiet quarter from HCL Technologies, starting off with dollar revenues, which are expected to grow by as much as 2%, a little over that on a sequential basis. And moving on to the margins, expected to remain largely flat at around 19.6%. Profits could see a dip of 1.8% on a quarter-to-quarter basis. We are also expecting the company to maintain its guidance for FY18 in terms of revenues at around 10.5% to 12.5% on a constant currency basis, with margins guidance standing at around 19.5% to 20.5%. We will be watching out for what the management has to say with respect to the dollar movements and how it can impact margins going forward. And that said, we're expecting IMS segment to remain sluggish, but we will be watching out for IP deals and the related services around them and what that has done for the company. We're also keeping an eye on the organic growth for the company and also what its newest acquisitions have brought in for the third quarter. But on the whole, we're expecting a quiet quarter from HCL Technologies.
Let's go across to Yes Bank. Rana Kapoor is talking post the numbers.
6 crores. So, which translates into an overall capital adequacy CAR of 19.5% and an overall Tier 1 ratio of 14.7% and a CET1 ratio of 10.7%. So overall increase in capital funds year on year has been 62.3%. The bank has approximately added about $2.5 billion over the last approximately 5 quarters to capital funds. And as you can see, the overall capital adequacy is almost at an all-time high of 19.5%, allowing the bank to grow steadily in the future. Our growth in advances was fairly high, overall 46.5%, given the comeback in corporate growth, fairly robust corporate growth, accompanied by augmentation of retail banking advances, which have more than doubled in the last 1 year to 11.8%. And along with MSME advances now aggregate to about 32.3% compared to 31.1% about a year ago. The asset quality of the bank for this quarter continued to be stable, and the aggregate credit cost of the bank for the full year now is 64 basis points, and for the quarter specifically it was 18 basis points. I'm also pleased to share with you that Yes Bank is the first bank to establish a medium-term note MTN program on the global securities market in India, which is part of the India International Exchange at the GIFT City in Gandhinagar. We are also happy to report that Yes Bank in December was included in the S&P BSE Sensex for the first time in its life cycle, having been a part of the NSE Nifty for over 2 years now. The bank also on international indices such as MSCI, ESG, SRI was included for the first time based on very strong operating performance on environmental, social, and governance parameters. Moving on to profit and loss key data points. As you will see, that our total profit for this quarter once again exceeded 1,000 crores. The first time we did that was in September, when we just crossed the border of 1,000 at 1,003. For December, this number has gone up quite significantly now to 1,077 crores, which is a growth of 22% compared to the corresponding period last year. I do want to mention that this 22% in itself is fairly significant if you really look at the impact on the treasury gains, which was fairly large in the corresponding period compared to the corresponding period. And so 22% factors in the adverse impact on treasury as a result of a significant shift in the yield curve in the quarter gone by. Net interest income of the bank was 1,888 crores, representing a growth of 26.8%. Non-interest income was extremely robust, grew very robustly at an overall level of 1,422 crores, representing a year-on-year growth of almost 40%. Total net income was 3,311 crores, representing an increase of 32.1%. Operating profit was at 2,002 crores, representing an overall growth of 37.7%. NIMs were fairly healthy compared to last year at the same level, 3.5%, and the cost-to-income ratio was at 39.5%. On NIM, I do want to mention that the bank was somewhat impacted by about 10 basis points as a consequence of very significant bond raising, perpetual bonds of almost 5,415 crores, which were AA rated and raised at 9%, plus Tier 2 bonds of 4,000 crores that have been raised in the last quarter, which were priced at 7.8%. Their pricing looks very good compared to the current yield curve, shifts that have taken place. But the blended cost of this on the cumulative amount of these Basel III compliant bonds, 9,415 crores was 8.5% compared to our base cost of funds, which is around 6 to 6.1%. So there is a temporary dip, and it is most likely that given the overall growth curve of the bank, given the CASA accretion, which is looking extremely satisfactory, and given more organic production of PSL, which is happening, that we'll be able to achieve our objective, medium-term objective of getting to 4% NIM no later than March 2020. I do expect it to happen sooner, but our objective is no later than March 2020. So overall, if you see the ROAs of the bank were at 1.7% and the ROE at 18%, even though we raised capital just about 3 quarters ago. The book value of the split share, the 2 rupee share since September, is now at 106.8 rupees. On a cumulative basis, I do want to mention that the overall profit of the bank is 3,045 crores. So in 9 months, we have pretty much crossed 3,000 crores PAT, which is an increase of 26% compared to the corresponding 9 months of fiscal 16-17. So as you can see, the P&L has demonstrated fairly sustained delivery, and our operating outcomes and metrics continue to be extremely strong. On balance sheet, overall, as you can see, the bank is increasing its market share, and also improving the overall granularity of our loan portfolio. The overall total assets of the bank grew by 36.2% to a level of 2,65,432 crores. So we are now a medium-sized large bank in our country. And this, as I mentioned to you, is a very significant milestone in our life cycle to get to this level. And we are hoping that in a couple of quarters, we get to well past 3 lakh crores. Deposits grew correspondingly by 29.7% to an overall level of 1,71,000 crores. CASA ratio stood at 38%, which is an overall improvement of 4.7% in 1 year. And this, I think, is our single biggest balance sheet success, that 2 years in a row, the bank has been able to improve CASA quite dramatically by almost 5%. In the last 1 year, it's grown by 4.7%. And this is on the back of CASA growth, year-on-year growth of 48%, as you can see. Within this, SA stands at about...
That's Rana Kapoor, and of course Shraddha will fill us in on the details. Remember, if you log on to www.bloombergquint.com a bit later on, you'll get the complete details of Yes Bank numbers, and tomorrow morning we'll of course discuss what brokerages have said about these numbers as well. Though for now, speaking of markets and brokerages, BNP Paribas, they shared their 2018 outlook with us, and Manish Chaudhary believes that despite the run-up that we've seen in 2017, Indian markets are a tad bit cheaper than some of the Asian peers. Here out a slice of the conversation that we had with us earlier today.
India, despite this heady rally of about 35%, actually underperformed MSCI Asia ex Japan. In that year, China, MSCI China moved up about 55%. Korea, both KOSPI and MSCI Korea moved up close to 45 to 47%. So India, despite this massive rally, was actually underperforming, and therefore it turned a little cheaper compared to its peers from the beginning of the year to the end of the year. We believe that, yes, India continues to trade at a premium that's possibly a little less than 1 standard deviation above the mean, the long-term mean today, which means that, yes, the premium exists, but it's possibly not egregious. Now, having said this, I must sound a bit of cautionary note at this point of time. In the other parts of Asia, particularly North Asia, this massive rally has been underpinned by strong fundamentals, which have translated into earnings estimate increases. Asia ex Japan, consensus EPS moved up about 15 to 20% last year, driven largely by Korea, by Chinese financials and Chinese tech. Now, Chinese financials joined in towards the end of the year. India, in contrast, has drifted down throughout the year, Indian EPS estimates. So, for this rally to continue, for this rally to become stronger, we would need to see a reflection in the consensus earnings estimates for India, which haven't reacted till now, except for a few small pockets like materials. The metal companies have been doing well, etc. But we need to see that get a little more broad-based.
What's also looking like changing is the underperforming 2017 spaces, and IT is probably one.
Right.
PSU banks, if at all, they do get the recap and therefore growth, could be the other one. Could 2018 be the story of some of the underperformers starting to make a contribution as well?
You see, in December, when we published our outlook report for 2018, this is a point that we made strongly. We said that, yes, in 2018, investors should actively consider looking at the good quality underperformers of 2017. Now, in the Asian region, you have quite a few of them, particularly in the material side and the chemical companies across North Asia and Taiwan, Korea, which underperformed. But at the same time, the valuations are cheap and the fundamentals seem to be strong in terms of the chemical margin sustaining. In India, there are a couple of examples that you cited. IT is one of them. We continue to have exposure to Indian IT in our model portfolio. The public sector banks, we're a little more circumspect about, because We think that this whole movement towards recognition and resolution of the NPLs, that is obviously a great thing, great development for the PSU banks. We will have to watch out for some of these assets which are coming in for bidding, over the next couple of weeks. We also have to watch out for whether those assets actually get transferred to other private sector owners successfully. And for that, I think we need another 3 months or so to figure that out. But
you have any doubts, any impediments that you see?
Well, not really, but it's like, what kind of valuations the private sector companies are willing to bid for these. That is an important variable. Whether the actual transfer of ownership happens in a smooth manner, that is another, point to look at. So, I think the recognition part has happened, driven by both the Reserve Bank of India and the government. Now we are in the resolution part, and the third phase is reconstruction.
And moving on with banking sector updates, HDFC Bank is likely to continue this quarter as well. The positive trend is likely to continue in this quarter as well. That's the expectation. Shraddha Bala joins us with more on that. Shraddha, same old quarter this time around as well?
Yes, that's true, Pradeep. There are usually no negative surprises from HDFC Bank, so the strong earnings trajectory should continue. So in terms of key numbers, net interest income is expected to grow by 21%, net profit seen about 22% higher. Net interest margins should remain steady around that 4.3% levels. Loan growth should come in between 20 to 25%, and asset quality is expected to remain stable with the gross NPA around 1.3%. Having said that, the accounting for one large account that was reported in second quarter needs to be seen. That account is widely expected or believed to be the JSPL account. That apart, what we're also going to be looking out for is going to be the agri portfolio performance and the asset quality trends as far as the retail unsecured lending portfolio is concerned. But broadly, it should be another strong quarter for HDFC Bank.
All right, Shraddha, thanks a lot for bringing all those details with regard to HDFC Banks. The numbers come out tomorrow. While moving ahead, the government has already announced its intention to double farmers' incomes by 2022, and this year's budget may be the best opportunity to provide the much-needed impetus. Moreover, the recent Gujarat Assembly election saw an erosion in the BJP's rural base, and Saurashtra was at the epicenter of this agitation. Purva Chitnis travelled to the region to understand why the unrest and how much may impact the last full budget before the Lok Sabha polls next year.
This time last year, Bipin Bhai's farm donned a blanket of white and he produced 600 kgs of cotton. But this year, the story is different. 50% of the cotton on his 1 hectare farm in the Amreli district has been attacked by pink bollworms.
2-3 साल से वो गुलाबी ईल का और कीड़े का इतना दिक्कत है, परेशान करके रख दिया। अभी पहले जैसे कि 20 से 30 मन का लगाव रहता था, तो अभी 10 से 12 मन लगता है। अच्छा। और उनके सामने तो खर्चा बहुत बढ़ गया है।
Across Saurashtra, other cotton farmers also echo Bipin Bhai's thoughts on the rising cost of pesticides and fertilizers, which can go up to 3,000 rupees per litre.
इस साल तो 1-2 महीने एडवांस में निकालना पड़ा है, क्योंकि उसमें कीटक आ गया है, तो गवर्नमेंट ने कुछ उसमें ध्यान ही नहीं दिया है। उसकी कोई दवाई नहीं आती है तो बहुत महंगी है, लेकिन वो काम ही नहीं करती है।
Groundnut, which is the popular alternative to cotton in Saurashtra, is not reaping benefits for the farmers either. A bumper harvest of about 35 lakh tons this year means farmers are not getting the desired price for their crops.
पिछले साल कपास और मूंगफली का पाक लगाया था, जिसमें हमें बहुत घाटा गया था और नुकसानी हुई थी बहुत ज़्यादा। 1 एकड़ पे हमें जो 17-18 हज़ार का कपास और मूंगफली में 1 एकड़ से 17 से 18 हज़ार का खर्चा आता था। जब ये हम माल लेकर हम जब मंडी पे जाते हैं, तो हमें सिर्फ उससे 20,000 22,000 जैसा हमें मिलता था, जिससे 5,000 का मुनाफा हुआ। वो इस महंगाई के ज़माने में वो कुछ नहीं है।
The glut of groundnuts in the market has caused the rates to fall below the minimum support price. The price in the bulk markets is around 600 to 650 rupees for 20 kilograms compared to 890 rupees minimum support price.
पहले जो 3 साल पहले खुले में ले रही थे, ऑक्शन में ले रही थी, अभी ऑक्शन में नहीं ले रही। ऑक्शन में लेते हैं तो उसको भी फायदा मिलता खेडूत को भी।
पिछले साल मूंगफली का रेट ज़्यादा था, इस साल 100-150 रुपया कम है। क्रॉप ज़्यादा है और मार्केट में जो सेलिंग होना चाहिए वो होता नहीं है सिंग तेल का। गवर्नमेंट जो परचेज करती है उसमें क्या है, सेंट्रल कम है और उसमें लिमिट है कि डेली इतना ही परचेज करो। वो मार्केट गोंडल मार्केट यार्ड में 4000 बैग है।
The other factor causing a decline in groundnut prices is the high demand for palm oil and other substitutes currently. The government imports palm oil and other substitutes in higher quantities, which results in lowering demand for groundnut oil. In November, however, the government hiked the import duty on edible oils to 15%, and brokers and farmers hope this will improve the current situation.
जो फॉरेन से खाद्य तेल, खाने का तेल आता है, पामोलिन, सोयाबीन, वो कम रेट में मिल रहा है, इसलिए सब खाने वाले लोग वो परचेज करते हैं, यूज करते हैं। अगर जो फॉरेन से यहाँ इंपोर्ट होता है तेल, उसके ऊपर गवर्नमेंट ड्यूटी डाल दे और सिंग तेल और ये तेल का जो रेट है वो इक्वल हो जाए, तो फिर क्या है, ये मूंगफली का भाव भी मिलेगा और किसान को भी लाभ होगा।
Across Saurashtra, farmers have a similar story to tell. Failing market prices of cash crops such as cotton and groundnut, doubling of input prices of fertilizers and pesticides, and also the attack of bollworm on cotton have all left farmers angry and desperate.
Another problem faced by the peanut and cotton farmers in Saurashtra is the dearth of technical assistance on inputs and the lack of knowledge about seeds and fertilizers.
किसान को कोई पता नहीं, यहाँ से शहर जाते हैं और जो एग्रो वाले हैं वो ही जो कहते करते, पढ़े लिखे नहीं, कुछ ज़्यादातर जानकारी नहीं है किसी के पास, बराबर है। कोई भी विकल्प करना पड़ेगा, इसमें दाल रोटी खाना ही होगा हमारा, ऐसा लगता है, खेती छोड़ना पड़ेगा जैसे।
With that, it's a wrap on this leg of countdown. Excuse me for that, from Pradeep, Namit and me, Neeraj. Thank you so much for watching.